Hey, Mark. Well, while we get,
Can you guys hear me, Kerry?
yeah, we can hear you perfectly. We've got you now.
Excellent.
Thanks, Mark. So
No worries.
as I was just saying to the audience, we're super excited to have you here today to talk about what you guys are doing over at Smartblocks and how that's fixing problems in real estate using tokenization. And so we're very excited to have you, an expert on real estate tokenization, here with us today, as well as our two in-house experts, Dr. Robert Murphy and Tony Garcia. Dr. Robert Murphy is our chief economist, and Tony Garcia is our chief information and security officer. Before we dive into our conversation today, I'd love if everyone could introduce themselves to the audience really quickly. And Mark, it'd be great if we could start with you and hear a little about you and Smartblocks.
Yeah, so Smartblocks is a real estate tokenization platform. It's global, it's on the blockchain, and anyone in the world can invest or put their real estate on the platform. We're very excited to have been released into beta, and we already have transactions going on the platform. As everyone knows, there's a regulatory nightmare that we've got to weave through. Depending on the country, it's where there's jurisdiction, but that's on this chat to talk.
Yep, very exciting. And congratulations on the launch of your guys' platform. I know that was a big announcement and a big milestone for you guys, and I'm excited to hear more about the activity on it and some of the other things that you guys have done on the consulting side. And so with that, Dr. Murphy, would you like to introduce yourself and potentially tell the audience a little about Infineo?
Yeah, sure. Thanks. So thanks everybody for tuning in or those listening to this after the fact. Yeah, so I'm the chief economist here at Infineo, and big picture, one of the main things we're doing is we are taking life insurance policies and putting them on the blockchain and then creating more structured products built on top of that. So in a sense, we like to describe it as we're making a new asset class available to investors, both retail and institutional around the world. And so we're always happy to interact with somebody who is also in the tokenization of real world assets game. And likewise, we recently just launched our what we call the policy ledger. And so if you are interested in digitizing your own life insurance policy, we encourage you to go ahead and do that, just for have a digital backup in case something happens. Then it's always good that, the beneficiaries get notified right away from our system, so there's no fumbling around looking for a policy in grandpa's drawer, that sort of thing. So if you want to see more on that, just go to infineo.ai, and you can see how that works. But yeah, excited for this Spaces conversation.
Yeah, thank you, Dr. Murphy. And with that, last but not least, our CISO, Tony Garcia.
Hi, Tony Garcia. I'm the Chief Information Security Officer here at Infineo. So I do all things security privacy related, make sure all the data and everything's protected, or encrypt all the things, as the new kids say. So looking forward to this conversation, seeing how we can apply the modern blockchain and these type of technology innovations to driving real assets.
Great. And now that we're through the housekeeping and we've done our introductions, it's time to jump into this exciting conversation we've got planned today around the real estate, tokenization of real estate. And so with that, Mark, I'd like to start with a topic that is really buzzwordy and everyone likes to talk about in real estate tokenization and tokenization of real world assets specifically. But I'd love to discuss how tokenization can potentially create liquidity within real estate investments. I actually am kind of the opinion that it doesn't directly create liquidity, it just creates liquidity optionality, which people mistake. Just because something can be more liquid doesn't mean it is. And I'm curious what you've seen in terms of the liquidity of tokenized real estate.
Yeah, so I look at it two ways. There is liquidity in real estate in that you're unlocking opportunities for people around the world that are invested in real estate because they don't have the down payment. They don't have access to investor capital to invest in, let's say, a token for $50. As a real estate owner, that doesn't really move the needle much. But when you're talking globally and you're talking about people putting in $1,000, $2,000 here and there, it really adds up. It's liquidity you never had before. So that's one way I view it. Now, the second way is what I call super liquidity, like a real liquid real estate market, but it's not here yet. That's where you introduce the secondary markets. You introduce the DeFi markets, which are here. They're just not very robust for security tokens or property tokens, as I call them. And that secondary market's like a stock exchange, but it'll be backed by automated market makers, and they'll operate more like a REIT. So from that perspective, we're going to see a lot of liquidity. And if you want, we can go as deep as you want, but there'll be the DeFi markets where you'll be able, like in the United States, to borrow is around 8%, whether it's commercial or residential. Well, and so it's 2%. It'd be nice to get a tokenized mortgage from someplace in the world that's 2%. How much does that add to your bottom line? It's tremendous. And that's here today if you know how to do it. It's a little kludgy, but you can do it. But that'll be like second nature within 5 years. And that's why you see the big companies like BlackRock, JP Morgan, and Franklin Templeton all jumping in now. They want to be the forerunners to all of it. So liquidity is going to happen. You will have a liquid real estate market. It'll be represented by tokens on the blockchain. It is here now in terms of smaller investors that can get in, and it'll be in a big way liquid in the future with DeFi, secondary markets, and derivatives of all things. That's a whole other conversation.
Well, yeah, this is Bob speaking. So yeah, just to chime in on that. So that's interesting, Mark. And it's interesting how much it dovetails with what we're doing with life insurance, because it's a similar kind of thing where, people who are in the know that certain specially designed life insurance contracts have very attractive properties in terms of just, compared as an asset class compared to other types of things you can invest in. But it's difficult for someone to get into it. And, like if somebody says, oh yeah, I want to put whatever, $5,000 into that and see how it goes. You can't do that because no, you got to take out an actual policy. You got to have your insurable interest. You got to make premium payment. So it is. And then as you say, it's sort of a chicken and egg. Like once you start building that up, then it makes it even more attractive because now there's more liquidity. And also, like you say, I see the similarities that around the world, like, we were just talking about this earlier today. Some people like to have access to a US dollar denominated asset that grows at 4 to 5%. For people who are being ravaged by hyperinflation, that is valuable, especially if it was very liquid and they could get in and out of it. So anyway, so it seems like there's a lot of symmetry between what you're doing and what we're doing here in Infineo.
Yeah, it's going to happen. It's going to happen before everyone knows it. It'll be one of those moments where you're like, shoot, I should have invested 3-4 years ago. So I say within 5 years, all of these things are reality in a big way.
I completely agree. And especially with the way the RWA space has taken off today, I loved how you pointed out that while everyone is focused on more of like the large deals and the biggest asset managers coming into the space, the $2,000 to $5,000 investor, the couple $100 investors does matter. And when you're talking about on a global scale, that truly adds up. And you can build a really robust community of real estate investors, like what Realty's done. I'm not sure if you're as familiar with them, Mark, but I just thought it's so impressive. They've obviously been tokenizing properties in the United States, distressed properties, and selling those to international investors, namely in France. But they've tokenized tens of millions, it's not hundreds of millions at this point, in real estate. And they were able to, from that community of investors, raise $5 million in an equity round in about 30 minutes from those same investors. And so just the power of community in that tokenization unlocks is really, really incredible. And so really agree with your opinions there on the liquidity. And so what is Smartblocks doing in particular to enhance the liquidity and investment opportunities in real estate?
I'm sorry, repeat the question.
What is Smartblocks doing specifically to help enhance the liquidity and investment opportunities in the real estate tokenization industry?
Well, the first and foremost thing, and we've just been talking about this, is make sure that everyone knows that it exists, that there are other options for you in Venezuela or some of those high, let's call them inflation environments where, your denomination, your currency is $1 today and 50 cents tomorrow. So now you have another place that you could put your money that's much more secure than crypto. It's actually backed by real world asset date. So getting awareness to these people that are out there that it exists is something that we're doing. Not in a big way. Pretty soon, we're going to do a full launch of our platform. Just work out a few kinks. And then building that secondary market, partnering with our competitors, believe it or not, to have our property tokens on their exchange and them on ours. We're going to make our first announcement here pretty soon with another real estate tokenization platform out of Europe. And then on secondary markets, creating that, and then making it much easier for people to use the DeFi markets. So even today, you could take your property token, you could collateralize it in a market, and borrow against it. And people will compete to lend you money. Where else can you do that in this world? So you could take a loan out in Japan at a lower interest rate than you could take out here in the United States. Why wouldn't you do that? Right now, it's a little kludgy, so you don't see a lot of people doing it. But in the future, it'll be super easy. So now you're getting loans from around the world for your property as opposed to just locally at your bank, who's a nightmare to deal with. We all know they're a nightmare to deal with. And I've many debates with bankers as to why that is. It's not entirely their fault, but it's a nightmare. So let's face it.
Hey, Mark, can you just elaborate a little bit? That intrigued me. Everything you said was interesting there, but what really grabbed my attention when you were saying how you're actually collaborating with your competitors in the sense of, trying to foster, like recognizing, I suppose, that if the community sees that this is sort of a joint effort and just builds trust and acceptability, that's good for everybody who's in the industry right now. The reason I like it is because historically, like I've done some research on, commercial banks, like in Scotland back when it was fairly unregulated, and they issued their own notes that, were claims on gold or silver. And then like the big banks all got together and agreed to accept each other's notes because they realized that's actually good for all of our businesses at the public. In other words, they want to encourage adoption by the public, and it wouldn't work if each bank only took its own notes. And so like, anyway, it sounds like there's some similarities there. So you just speak to that a little bit more. Why would it be in your interest to collaborate with your competitors in that respect?
Yeah, I mean, it's a very good analogy, and I do remember those times. Not that I lived during those times, thank God, but yes, it's very similar to that. You've heard of Jeffrey Moore's Crossing the Chasm?
I've heard of it, but I haven't studied it enough.
Yeah, so this is like the tech Bible. So there's multiple stages of tech adoption, and we are, kind of in the super early adopter phase. Once you cross the chasm, which is kind of the next step, then early adoption takes place where, this is a viable option every time we want to buy or sell real estate. We haven't gotten there yet. The way to get there is to collaborate with your competitors, not price fix. There's a big difference, but collaborate with your competitors in order to help each other out. Like you said, community, to get through that chasm. Once you get over the chasm, first of all, real estate is a $280 billion industry. My competitors all get that. And we know that there's more than enough, lifetime of enough real estate for all of us. So we're all trying to work together in order to get across this chasm. Unfortunately, you got people that have their own ideas as to how to do it, but there's enough of us that are thinking, let's figure it out together, get over that chasm, and then compete heavily then. So that's what's going on.
That's incredible, and I would really like that description using that life cycle tech adoption. I'm very familiar with that chart, and so I agree. We're very much in that early adopter stage right now.
Let me just chime in on that real quick. I think it's really important what Mark said here. I think from a tech standpoint, this is kind of critical. Like, compliance is pretty helpful with the tech field, where we got this challenge of everybody wants to own the market, and without that early cooperation, I think more to your point is that's where it's very important to establish kind of a broad framework for everybody to play on an even field early on. And then once everybody adopts to that, you get a lot of help. I think that's a very simple.
Definitely. And thank you for that added color there, Tony. Appreciate that a lot. And I just want to hit on something that you mentioned a little bit earlier that may be like in my opinion, it is the largest hindrance to adoption at this point, which is regulation and just the legal landscape we live in. I'm very familiar with how complex it is and all the different parties that need to be involved to actually adhere to the current regulations. And so, Mark, I'd love if you could potentially speak to how you feel about the current state of the legal landscape in tokenized real estate and whether you think it's helping the industry or hurting like I do. Do you have any opinions there?
Too many, but I'm going to carefully choose words. So first of all, SEC is a joke. They clearly don't get it. They're losing in court. Now we have a Supreme Court decision that overturned mostly the Chevron case study. Chevron basically said federal agencies can make up their own rules as they're trying to interpret what Congress intended. So then you have every federal agency making up their own stuff, creating rules that these unelected bureaucrats have created. And sorry if I've got a disdain in my voice. I just don't like this type of rule by. It's almost a dictatorship. So now the Supreme Court, thank God, has struck that down. I think we'll see an SEC that gets their act together. Let's hope so. And provides clear guidance as to what is legal, what is not. Right now, we're all using, us in the industry, at least the United States, we're all using, let's say, exemptions. And these exemptions are getting around certain laws that were put in place in 1941, with the Howey test and all that. So now they can't do that. They can't make up the rules. They either have to provide clear guidance or they're going to continue to lose in court left and right because the rules that they've along the way are no longer applicable. at least from my point of view. They still might think they're applicable, but the courts are now going to start striking them down because they can't just make it up as they go. So regulation is the number one problem I face, in that a lot of investors, a lot of people are like, well, I'd love to do this, Mark, but I'm worried about what the SEC is going to do to my big business. So the ones that are tokenizing real estate are kind of these smaller players that are more risk averse because they don't have that much to lose. But once this thing, once we get this clarity, once we get Gensler out, or Gensler has a change of mind about what's, their actual role is, I think we'll see this, mass adoption happen in a big way. We're already seeing it anyway with BlackRock. Everyone knows that their investment in securitized and their $100 million tokenized fund that quickly turned into $300 million. It's already happening at the highest levels, which is a great sign. But there's still too many developers, real estate owners who are in other parts of the tokenized RWA industry. There's a lot of people that are afraid to jump in because there's too much to lose. So once that's clarified in the U.S., I'm talking, we're going to be fine. There are other countries like Dubai, El Salvador, I think Switzerland, where there's much clearer regulation. So that's a plus. But when you're dealing with U.S. investors, you still have to follow U.S. law, and that's the problem.
Yeah, just to chime in on that, for the benefit, I know we have some foreign listeners where they might not be. There was a pretty big Supreme Court recently, and so the precedent had been set in the mid '80s with so-called Chevron ruling that if a regulatory agency like the EPA, if they didn't have clear statutory guidance as to how to regulate something, and then the Supreme Court basically said, well, if we can't tell from the original legislation what the intent of Congress was, as long as the EPA can come up with a plausible, systematic way of justifying whatever regulations they impose, we're going to defer to them on that. It's not that the Supreme Court's going to weigh in and say, actually, why don't you regulate emissions this way? And so that de facto has meant that, it was a nice little system where, we're kind of be very vague. And so then if something hurt business, they would be on the hook with, hey, don't look at, don't yell at us, go yell at the EPA. And so anyway, the recent ruling, it's not like anti-regulation, it's just saying, no, these agencies in the executive branch can't just sort of fill in the gaps, that if there's not obvious guidance, then, Congress has to specify. So anyway, that's what people are talking about the U.S. context for foreign listeners.
Yeah, and just to give you probably more context, with anything, you've got this system that whenever you have bureaucrats that aren't elected ruling over things, they push the limits more and more and more, and to a point where they're no longer looking at what Congress wanted to happen at the time. They're basically inventing it, and that's they just went too far. I understand why they were filling in some of the gaps, but thank God the Supreme Court stepped in and said, no, you can't do that anymore. You got to follow pretty much the letter of the law. But if there's any, I guess there's a system, or there should be a system in place where you can get feedback around what Congress's intent was. But it was being used to abuse the process here in the United States and to enrich, believe it or not, the SEC and what they were doing. So thank God it's been struck down, and let's see what emerges now.
100%. And so you did mention that the SEC has given us some regulation exemption, and I'm personally pretty familiar with them, and some of them have had some success just in terms of raising funds, but they really are pretty highly regulated exemptions. Do you see any of these exemptions as being a way for tokenized real estate to progress, or is it really the issue is that some of these assets are being regulated as securities as a whole from the Howey test?
Well, I mean, they're all securities, but there are exemptions to it, like a Reg D. But the problem with the Reg D is, and that's what we use, Reg D, maybe a Reg A every once in a while, Reg CF if it's under 5 million. But a Reg D basically says, depending on which one you use, there's two, but the only one we use is the one where you have an investor. The problem with that is, well, what if you're tokenizing a $10 million property and the investor wants to put it in $50, right? And you could do that with tokenized real estate. $50, you need to be accredited? Are you kidding me? I mean, so the rules, even the exemptions, don't fit this digital model, this new tokenized blockchain model. And that's only one problem. And yet the SEC won't even respond to you when you ask them, well, what about this, this, and this? Much less put specific rules in place. There should be a license. There should be a tokenized license. And here's the boundaries. Here's what you got to do. And KYC AML makes perfect sense to me. We do that anyway. But maybe it doesn't make sense in second, tertiary, fourth trades. In real estate, it does, because you need to have a cap table for your real estate. You need to know who to pay off. But maybe another tokenized situations, it doesn't. So, but they don't see that they need to evolve into a digital world and a blockchain world where everything works differently, quicker, more efficient. So, yeah, I guess that's what I'd say to that.
That's incredible, and I completely agree with you. Really, I think that personally, I think that an accredited investor test, something like the tokenization license that you mentioned, would really help bring down that barrier to entry. But again, there's just are so many underlying issues that it's going to be tough to work through. And I'm just really curious to hear, you said you namely use Reg D, and correct me if I'm wrong, but you namely use Rule 506C of Reg D, which is where a company can raise money from an unlimited number of accredited investors, and you just have to make sure that they're accredited, essentially. And
and you cut.
Yeah, I mean, that's incredible. And so you did mention that you have also dabbled a little bit, or you've looked at Reg CF, but I'm really just more curious to hear about some of the assets that you've tokenized. If you could explain a little bit of the structure of them, and how you're making sure you adhere to this very gray regulatory space we're working in right now.
We're going to go down the weeds, aren't we? Okay, so first of all, we are not a custodian or a broker-dealer, so we have to have, when you tokenize a property, we'll use an exemption, usually a Reg DC, 506C, and then, because you need a custodial license, you need a broker-dealer license in the United States. Outside the United States, it works different, but inside the United States, you have to follow a certain process. And that process is any money taken in goes into an escrow account held by a licensed escrow agent. All the monies are distributed through escrow, so that we're not taking custody of any of the funds. And that's really important here in the United States. Outside the United States, it's not important. Some countries it is, but for most part, it's not. You know, you're held to a certain standard, and you have to meet that standard. Just as if you were an e-commerce company, you're taking all this money and you're expected to ship the product. It's just, to me, it's the same concept, but okay, whatever. And then, because we're not a broker-dealer, we can't charge a percent of any monies raised from real estate. So we charge a transaction fee. Outside the United States, you can do that. So we have two different models depending on where you're investing from. And it's just weaving your way through this regulatory nightmare set up for something that was the way you used to invest 60 years ago. It's ridiculous. The SEC is well aware of this, so is FINRA, and yet choose to do nothing with it. Their response to anything that you do and any kind of writing that you send them is, the laws already exist, talk to your attorneys. Well, we did talk to our attorneys, and they were saying the laws don't exist. They don't apply to what we're doing. So you have this situation where it's almost untenable, and who can blame investors or big real estate developers when you're in this situation? That's in the U.S. Outside the United States, it's much clearer, much easier.
That's really, really helpful there. And I'm really happy to hear that. I mean, it sounds like you're following all the regulations to the best of your abilities. And I mean, there are a lot of players that aren't. I mean, there are people that are almost just being negligent about it and leaving their investors out in the wind. And there are aspects of DeFi that allow for decentralization, but with that, you have to still provide the investor certain protections. And so I'm not sure if you're familiar with the company Lofty AI, but I wrote a long piece on them a while ago, essentially about how they're not doing anything you just said, and they're essentially leaving their investors out to dry with their assets. And so I just thought that was interesting, and I'm really happy that you guys have figured out how to thread the needle there.
Yeah, I mean, are they doing a DAO situation?
They are using Wyoming DAOs, but it's not. They don't really have a DAO platform. It's not really a DAO. They say it is, and that's kind of the leg that they stand on in terms of why they don't have to follow securities regulation.
Well, I don't blame them. I'll be honest with you. My position is, I don't blame them. As long as they're not doing anything nefarious or fraudulent, I'm going to be clear about that, which I don't think they are. I think they're honestly just trying to survive in a market that's not clear. It's vague, and it's vague on purpose, in my opinion. So I don't blame them. And if they get a letter from the SEC, I don't think it's going to carry any weight based on what the Supreme Court just ruled. But who wants to get in a fight with a government agency with unlimited funds? Not me. So I'm going to follow it to the best of our abilities and what the attorneys are telling me. But even then, there's no guarantee. But I feel like with this new ruling from the Supreme Court, when they're not being clear, I could show the record of correspondence that I've tried to do with the SEC. I think we're just fine.
I actually really agree and like how you put that they are really just trying to survive in this gray area and doing their thing. I, as a potential investor on these platforms, really appreciate what you're doing in terms of the investor protections, at working with licensed broker-dealers and custodians. And so it's really interesting to see the spectrum of different ways that people are able to tokenize real estate today. And so I guess with that, I'd love to move into a topic that focuses a little more directly on the title of the space and how we're going to fix the problem in real estate today. As a lot of know, we've seen a pretty stagnant real estate market for a while. And with that, you mentioned something earlier that could potentially help drive more liquidity in the industry. You had discussed really the lack of funding in commercial real estate, and essentially how you can arbitrage different loans and create different scenarios for yourself. But I'd love if you could explain that again and potentially dive a little deeper. And I'd also love to hear Dr. Murphy and Tony's thoughts on this as well. I just think it's so interesting.
Okay, so where do you want me to start with? The DeFi aspects of it?
Yeah, please.
Okay, so in crypto, if everyone's aware, you can stake or collateralize your crypto tokens and people lend you money. Usually it's 50% of the value. With property tokens, because there's an actual asset behind it and there's a legal process or foreclosure or some legal way of getting it back, especially the way we set it up, you have real security. It's not going away. This real estate's always going to be there. So, in some cases you can borrow up to 70, 80% right now. But it's a very kludgy process. Not a lot of the DeFi markets accept security tokens. What a property token is a security token, where there's KYC, AML checks. And for me, that's critical, especially here in the United States. I don't want to be involved in any money laundering. So as long as they accept that, you can collateralize it, you can borrow against it. And think about it. You got people from around the world that could offer you any amount of money for a loan. And that loan could be 3% all the way up to, who knows, 40. There's no usury laws in DeFi world. But you get to choose. There's people competing for your business based on what it is that you're putting up there. So to me, that's the future. No question about it. There's no way the local banks and some of the larger mortgage banks here in the United States are going to be able to compete with a country, let's just say it's Kenya for lack of a better country, that's going to give you a 2% loan. Now everything's going to even out over time. We're talking 5 to 10 years. It's not going to happen overnight. But when you have a global market that's instant, of course the due diligence is going to happen. It's not like you're just going to be able to do it, but think about it. You've already gone through a lot of due diligence in getting that property token. We certainly do the due diligence. We hire third parties to make sure everything is kosher and everything's what the developer says, and we do background checks and all that. So that's one layer, and then, the DeFi markets will be another layer of protection. So imagine being able to tokenize a piece of property. And here, if you have an office building, good luck getting a loan. But if you do, it's between 8 and 10%. But in places around the world that don't have these opportunities to invest in U.S. real estate, you might get 2%, 3%, 4%, like we did only 3 or 4 years ago.
Yeah, just to chime in on that, again, it's basic stuff for you, Mark, but for people who have stepped back and thought about, sometimes you can get lost in the weeds of the technicalities, blockchains and this and that. But yeah, in terms of economics, me as an economist, that's why I'm fascinated by the stuff that it's just, there's more credit intermediation that's being developed here and just connecting. There's people around the world who they would love to, I really like U.S. real estate, and that seems like a safe asset compared to what my other options are. And I would certainly be willing to put my money into that, to lend against that where that's the collateral, even if I'm only getting 2%. And then we're just connecting those people with the people in the U.S. who own the real estate. I need money right now, and I don't have liquid funds, but hey, I got this property, this commercial real estate that I can pledge as collateral. And so we're just connecting those two people, and that the social benefit, the economic efficiency gains of developing these new technologies.
You got it. I mean, if you guys want me to go, explain it more in layman's terms, I don't know what the audience's knowledge is of blockchain, but I'm happy to do so.
Yeah, if you want to give it a shot, that'd be great. We have listening from all different parts of the economics backgrounds, tokenization, crypto. So, potentially for people that may not understand as much what we're talking about, that'd be helpful.
Yeah, I mean, all the DeFi market is going to Uniswap. Let's just say you have it. Let's say you don't, or anything. the important thing to remember about a DeFi market, decentralized finance market, is that anyone can participate. There's very little regulation except for the quality of the tokens being allowed on the platform. So the good DeFi markets are very strict about what they're allowing and what they're not allowing. So, and those are the only ones I would go to. So you have a level of protection. Now, all this is a big, let's just say, lone stock market on the internet that's not being run by a central authority. It's just a program that's run by, for lack of a better word, AI and robots that don't have a human element to it, that are just following a set of instructions, a code, if you will. And when you put your token up there and everyone sees it, they can bid on the right to lend you money. I'm simplifying it like crazy, but this is how it works. And so you can choose, whether to take a loan from somebody, a certain rate, or not. And then it's set up so that you pay it back on a regular basis. And I've simplified this tremendously, but that's what it is. Now, today, when you want to go get a loan from a bank, you're going to make 50 applications of 50 different banks. I know that most of us don't do this, or you'll rate shop and then choose a couple of banks and then you go to them, or mortgage companies, and you go to them. This kind of reverses that. It's like you put up, your property token, which has already been vetted twice, and you say, hey, this has been paying, because everything's on the blockchain. Commercial property token that I have that's tied to an office building has been paying 13% a year. And it's been doing it in all, just think of it as a Carfax. This property token is like a Carfax for a property. This property token shows you all the dividends that's been paid out. And so you look at that as an investor and you say, well, I'll give them 3% loan for 5 years. And another one says 4%, another one says 6%. And so you get to pick and choose what, and you could split it. You could do like 3 different loans from 3 different people if you want. I'm complicating things, but that is just the essence of what a DeFi market for property tokens will be, and is today kind of, like I said, it's very kludgy.
Yeah, that makes sense. And thanks for the explanation for that, Mark. And we really do have people. Are you still with me? Stuff. So,
yeah, we're still with you, Mark.
Okay.
You with us?
Yeah, I can hear you now.
Perfect.
Yeah. Mark, every time Tony speaks, I can't hear him for some reason.
Test. Is anyone hearing me? Yes?
I can hear you.
Oh, okay.
I can't hear Tony. I don't know why, but I can't.
Uh-oh.
Oh, that is super strange. Yeah. And Mr. Musk, please take note of that. But with that, Dr. Murphy, did you have anything to add to what Mark was saying there?
I mean, just again, thanks for breaking it down. I think, people aren't fully appreciating just how rapidly this is going to scale. Like, you're mentioning the AI. So, and that's the thing, like that's some of why I'm so excited about the future. This is coming faster. I think most people realize that these smart contracts, you can have them in a sense governed by, AI systems that can make snap judgments or whatnot and decide things. But yet it's all, open source. So everybody can see and look at the code before they decide what they want to get into or not. So there's like a good blend of autonomy and decentralization, but yet at the same time, everybody knows what they're getting. And so that's, once people find protocols that they like, then those things can proliferate very rapidly. And, so I think it's very interesting that as people discover win-win contractual arrangements, that's just going to, be rapidly adopted by all sorts of people around the planet.
Yeah, and we haven't even talked about derivatives, which is probably too much for a call like this.
I agree, but I have seen some pretty cool real estate derivative tokens out there. But I think we can probably save that conversation for another day. But yes, it is a really interesting topic there. With that, Dr. Murphy, I know that we wanted to talk a little bit about the comparative advantage between tokenized real estate and traditional real estate. Do you want to potentially ask Mark about that, or I can get up?
Yeah, sure. So Mark, you've already anticipated with some of your answers, Mark, but just for the benefit and also because some people might have just tuned in, mid call here. Can you just explain big picture? What if somebody says to you, there already are REITs and things like, I can invest into real estate, just a small amount, whatever. Like I don't have to go buy an actual property outright. So what is all this blockchain stuff? Is that just bells and whistles? Like what is the tokenization giving for me that's above and beyond just the packaging of real estate into broader asset?
Yeah, great question. So if the REIT, you don't own title, you bought into a portfolio of projects, which is fine. We've tokenized a real estate fund that's coming online here pretty soon. Also, you can't buy it unless you've got some special way of getting access to a U.S. stock market in order to invest. And, when on the developer side, remember we have two customers. We have the real estate investor and we have the developer. A developer, simply can't just raise money and create a REIT. It's extremely hard. So from the developer and from point of view, there's a lot of benefits to doing something. Essentially, they can create their own REIT, and I'm talking in 3 weeks. It's not hard. I mean, you still got to get the investors, and we're working on bringing on investors that'll fund anything in like 3 or 4 days. That's probably a year from now. We'll have that. So from the investor point of view, there's advantage in that it's global and you're on title. You literally are on title. And with a REIT, you're not. You're paying fees to the people that are managing the REIT. They're taking a percent of profit to property owners that are tokenizing property or not. So you're getting more of a return. From the developer point of view, just like I said, I'm repeating myself, but it's important to emphasize they can create their own REIT if they want a portfolio of properties, or they can use tokenized real estate to raise money or borrow against real estate, or even take money as a construction loan to build real estate out in a way that they previously could not do that. A REIT, just by its very nature, doesn't do.
100%. And there are only certain places where these REITs trade. And so you have to make sure you're in the right venue for the right asset that you're looking for. And so, that kind of brings me to the next point that I wanted to ask you here, Mark. Excuse me. How do you at Smartblocks look at interoperability? Are you guys really looking to build everything on one chain's infrastructure, or are you building everything to be interoperable between chains? I would think potentially the latter after your answer about collaborating with competitors, but I'd love to hear your thought.
Yeah, you can tell you're a blockchain guy. Okay, so first of all, we offer 5 different chains, or we're going to bring on a couple more here doing, and we anticipate that people will want to cross chain. So, working with a company like Chainlink, Polkadot, I think, does this. We're not quite there yet, but so that you could trade from one chain to the other without it being too expensive. We don't have that yet. You'd have to go to a third party to do it, but it's something that's definitely on our roadmap. But most people choose Ethereum on our platform, and Ethereum is pretty widely used. And I would have to find a relevant use case to say, why do I need to convert this, or why does it need to work on Solana's network? I haven't found one yet. I'm sure it's out there. If anyone wants to chime in and tell me, hey, this is a good use case, I'd love to hear it.
The only reason that I have heard against people using Ethereum is simply the gas fees are super high, and that people have been looking for layer 2s potentially that are interoperable. Have you heard that at all in potential clients and onboard or issuers? Yeah,
we're working with Arbitrum. We use Polygon. There are ways that we offer. There is, of course, liquidity. Because a lot of some exchanges, most take these layer 2s or even some of the other layer 1s, but when it comes to the overall liquidity of these other chains, it's just not as big as Ethereum. And yes, Ethereum can be very expensive. Let's hope it comes down, but maybe it doesn't. I don't have a crystal ball here. So if you're worried about that, if that's the primary motivator, then we would say go to a Polygon probably.
That makes sense, and that really aligns with kind of what I've seen as well. And yeah, I appreciate that insight there. And with that, I'd kind of like to, if possible, come back to kind of how you're addressing the market fragmentation right now in real estate tokenization. There are new firms popping up all the time that are trying to do this, but I really do think you're the first that I've heard talk about collaborating with others and actually listing each other's tokens on each other's platforms. And I recently had a conversation with a friend of mine that's been a consultant in the tokenization space for 6 years, and we were both of the impression that that was how real estate tokenization really takes the next step. So I'm really just curious about kind of how you guys came to the decision to do that. I know was probably a big, scary step to do that, especially with no one else doing it right now. But if you could speak a little more about that, that'd be great.
Well, I kind of look at a big picture. And I'm thinking to myself, we can each battle each other out, which would be ridiculous. Or we could come together until we cross the chasm and co-list, our properties on each other's platforms, because it exposes, that property to more investors. And there's no loss to the platform because the platform gets the fees whenever somebody invests in it. So to me, it's a no-lose situation for any of the platforms that are out there. I get to help people primarily listing on my platform, raise more money faster because it's on other platforms. And the other platform gets fees, however their structure is, as a result of that. So yeah, I might not collect, as much fees as I'd want, but at least I'm serving my real estate owner and developer. And I'm playing the long game. I'm not playing, I'm going to get rich tomorrow game. I'm playing the, let's build this industry. And in 2 to 3 years, when we cross the chasm, might be sooner. I've been in these storms before in the .com boom, where a rising tide lifts all boats. And, if your plan is to exit after that happens, you're going to do well. If your plan is to continue on, then, you got to battle for what I call gorilla status, being one of the big guys. But I haven't been in a market that's 280 trillion strong, and that's primary real estate. We're not even talking about the DeFi markets, which is another 280 trillion, or the derivatives, which is 800 trillion. So I think it'll be very interesting in 2 to 3 years when we cross the chasm, and you'll see a lot of consolidation. You'll see a few of us go public. You'll see some of us divert into, I'm just now a DeFi market or a secondary market or a derivatives market. It's going to be very interesting. I'm excited about AI, but I'm even more excited about what's going to happen in the financial world.
It makes a ton of sense to me. Dr. Murphy or Tony, do you have anything to add there before I move on to another question?
Just that I applaud the thinking like that. Our CEO, Cole Snell, often says that, there's times for collaboration and times for competition. And in many respects, he thinks with what we're doing here at Infineo, it's collaboration time. And again, it's try to convince, the broader investment community and the public at large, like this tokenization of these real world assets, that's the wave of the future. Just like maybe a long time ago, people would have been afraid of online banking. Like, oh, I don't know, that seems like I'm going to lose my money or something. Whereas now, even your grandma does the kind of thing. I think it's going to be a similar case here.
Yep, I do see that being the case too, Dr. Murphy. Thanks for that additional color there. And so I do have another question about a specific problem in real estate that we hadn't discussed directly, Mark. So please take it with a grain of salt and answer as you can. But really, a problem that I've talked about a lot, specifically with real estate tokenization, is the valuation and appraisals issue. With essentially how are we going to value these real world assets on chain and make sure that that's represented time. And so I'm really just curious how Smartblocks is approaching this issue and any potential technologies you've heard of that will help solve this. Any thoughts there?
Well, I mean, the appraisal, I'm just going to get real. So depending on the country, you don't know whether this appraisal's quote real or not. I know there's places all over the world where you just simply bribe the appraiser and they'll say anything you want. And that's why we always have a second look at everything. We completely do what's called a desk appraisal to make sure that, yeah, this is reasonable, or yeah, these comps are really comps. They're not made up, because we know how critical that is to have trust with our investors. So the appraisal issue is a big one with us. We will make sure, to the best of our ability, and pretty soon we got a grant, to an AI grant to help. We're gonna have AI help with that due diligence around the appraisal is one of the aspects of it, to make sure that at this current time, here's what you're investing in, and this is the value. There's no scientific method to value. It's an art and a science, but this is within range. And so we will certify that this is within range at this moment in time. And so for the appraisal issue, that's what we solve. Now, for the real-time value of the token, the property token, it's gonna work kind of like a REIT. But we need liquidity first in the secondary markets to really show a market price for these things. And you're going to do that, and you're going to see that through what's called automated market makers. And if you want, I can kind of explain that concept, but I'm going to assume everyone knows what that is, where you have a robot essentially guaranteeing a buy on the other side. And this is set through an algorithm that's too complicated for me to even understand. So you'll have automated market makers, and then you'll have real people doing arbitrage in the short term, just like you see in the stock market and the crypto markets. And then you'll have more longer term investors. You'll have institutions that are using it and pension funds that are using it to shore up maybe some risk in their profiles for their investors. You'll have everyone imaginable getting involved in these property token markets, but we're not there. We will not be there for 2 years. So I just want to put that out there. It's not happening yet, but it will happen. And once we get there, then we'll see day-to-day real-world valuations. Because remember, with the blockchain, everything's visible. Every payout, every dividend, everything that's ever happened to this property is on the blockchain. The AI could come up with a valuation if we really wanted it to, but the AI might not anticipate that there's a big mall opening up next to your office building in 2 years. So, it's never going to be perfect. Human beings will make that determination and, maybe value that property token a lot higher because they've got this information. But at least, we'll have some sort of system in place that gives you, to the best approximate value that you can, the real value, whatever that means, of a property token at that time. And, the world's a crazy place. It's not driven by facts necessarily and data. Sometimes it's driven by emotion. And I think we'll see the same thing with the property token market and day-to-day pricing of property tokens.
That was a great answer, Mark, and I'm happy to hear you guys are diligently working on that. It sounds very exciting, especially the work with the AI you're going to be doing. So very excited to see the developments there. And with that, I'd love to ask you one more question here before wrapping things up. Earlier, you had mentioned that one of the biggest things Smartblocks is doing right now is creating awareness for investors that these assets actually exist and that they can invest in them today and that it's safe and benefits such as instantaneous lending against it. And so in those conversations that you've been having, what would you say is really the biggest misconceptions that these investors are having with tokenization today? Or are they understanding it and diving in head first?
No, most don't understand it. Even real estate professionals, they think it's crypto. Oh, crypto is both a plus and a minus for tokenization. We're automatically thrown in the crypto, it's gambling camp, even though those of us in the no, it's just a digital share. It's the same way, we've been investing in real estate for decades. So getting through that hump and that hurdle, because it's a token, is very challenging. But once they understand it and you walk them through it, then they're like, okay, now I get it. It's just it's a blockchain token. It's not a crypto token, and that it just happens to operate on the same platform that crypto does. And so once they get to that realization and they know it's just a digital representation of a share of a piece of real estate, illegal, like you're on title. It's an SPV essentially, but you own the SPV that owns the real estate. And there's no one else on title but the SPV, but you own that. You own a piece of that. Once they get to that realization and they know it's legal and everything's kosher, it's when you...
I think you cut out there for a second, Mark.
Yeah, I keep getting calls for some reason, but it's when you roll in tokenization into the crypto camp, which I'd say 90% of people do, is where you have to unwind that and explain to them the differences. The only similarities are the blockchain. And that's where the similarities stop. So, you can't compare a property token with a meme coin.
And just like it would be like people comparing using a website like Fidelity to YouTube or something like that. They operate on the same system, but they're completely different functionally and in terms of what they actually do. I really hear you. And that's something we experience at Infineo as well. And the way that we like to kind of position it is it's a digital representation of the underlying real world asset. And obviously getting into the weeds like how you just did, the structure of the SPV, especially with real estate investors, probably makes them feel very well taken care of. So I'm really impressed with everything that you're doing over at Smartblocks and just with your insights you've been able to provide on the real estate tokenization industry as a whole. And to be conscious of everyone's time here, I think that we can begin to wrap this up. But Mark, in case any of our listeners want to stay in touch with you, want to keep up with the latest on Smartblocks, what would be the best way to do so?
Yeah, you go to smartblocks.xyz. If you want if you're interested in the tokenization world as a whole, there's a link there. It's my newsletter where we cover all things tokenization, not just real estate. So what we do is we kind of summarize the week's stories and provide real crystal clear feedback around it about what this means. So if you don't understand tokenization or you're an expert, this is a newsletter that keeps you, up to date with the latest and greatest. And we also provide some color around where we think everything is going.
That's incredible. I'm definitely subscribing myself. I can't wait to check out the next edition of that one. Very excited. Dr. Murphy or Tony, any closing thoughts?
Sure. Yeah. Again, thanks again, Mark, for doing this. And it's amazing how symmetrical our positions are, that we, as Jackson alluded to, we run into that as well, that, about tokenization, and people say, oh, so this is like Bitcoin or something? This is FTX? And we're like, no. This is
Exactly.
not, it uses some of the same technology, but no, this is not cryptocurrency. So yeah, good luck on everything you're doing, and thanks for doing this spaces with us.
There you go. You're welcome. Thank you.
Yeah, ditto, Mark. Thanks for sharing your story with us.
Yeah, and for anyone that enjoyed this space, this was our real world asset tokenization space. We hold these every other week on Tuesday at noon Eastern. And so if you'd like to stay in contact with us and up to date with the most recent spaces we're putting on, you can follow us on X, or you can subscribe to our newsletter at infineo.ai. That's INFINEO.ai. So Mark, thank you so much again for your time. It's been an absolute pleasure talking with you today. I hope to do it again sometime.
Right. Likewise. Thank you for having me.
Anytime. Have a good one, guys.
Bye-bye.